Well, here we are, the last video of the course. So maybe a little bit somber. Hopefully you're not like swinging around from the chandeliers right now, throwing confetti all over the place, breaking open a bottle of champagne and saying, thank goodness this is all over. That's probably not a good sign for me. But yes, this is going to be the last video. And if I can give you just one more assignment, it would be, if you don't know what this is referring to, then, I mean, you got to see that movie, the movie being Dumb and Dumber, especially if you like cheesy comedy. Then that's like a must-see movie. There's really no debate or question about it. Got to see that movie. And I just had to figure it somewhere in the training course. I had to make at least some reference to it. There's actually a couple other references that Dumb and Dumber fans will hear, that I've already made. But now we got the visual right there. The big thing though for this final video is going to be the final warning that I offer at the end. And I realize, yeah, I've had some of my dramatic moments in the course, but in this situation, it's not me being dramatic. It's not me over exaggerating, nothing like that. What I'm going to talk about at the very end is super, super important. It's so important, in fact, that it'll be kind of an awkward ending because I'm going to talk about it and then that's simply going to be the end of the course. And I'm doing that with intention. I'm doing that on purpose because I want it to be the last thing in your mind is, okay, that was a strange ending to an entire course, but yeah, maybe I need to think about this and I need to consider it. I've been teaching for a long time. I've talked to many traders over the years. I've seen many traders come and go, and a very common and a very consistent problem is what I'm going to issue the massive warning against. And the problem with it is it's an easy trap to fall into. It's not like you have to be a total moron or a total idiot to fall into the trap. You can be a very logical person, you can be a very smart person, and yet you can still fall into the trap because it's just kind of out there. So I want to try to do my best to really just point it out and say, hey, be very aware of this and don't go down this path, because I'm not going to say it'll lead you down to a path of, account annihilation and you're going to blow up your account. I'm not going to go that far, but it can certainly lead you down in a pathway of frustration and hassle and headaches, and that's just not a fun pathway to go down. So we'll end with that. But before we get to that, I just want to offer some final thoughts and just kind of give you my opinion on a few things. And if that can inspire you in a couple different ways, then that's fantastic. If it doesn't, then that's fine too. But I just kind of want to wrap up these analysis methods and like I said, give some final thoughts. Now, I have already given this full disclosure, but I'm going to do it again. I am 100% biased when I say this. I sell training courses, and full absolute disclosure, I would love if you would decide, hey, you know what? I want to buy one of your training courses to learn technical analysis. That would be fantastic. I would not complain at all. So I'm not going to sit here and try to hide that or try to play some sort of, psychology selling mind tricks on you. No, that would be awesome, and that is definitely an ultimate goal that if that works out, that would be fantastic. With that being said, though, if I can at least motivate you, if at least I can inspire you to dig deeper into technical analysis, then that's great too. Because that's really the ultimate thing. Even if you say, you know what, Clay, I appreciate the Forex course, but I'm good, I'm done, I'm not going to give you any more money. Hey, we're still friends by all means. Still send me questions about Forex course if you have them. I would be happy to answer them for you. So worst case is at least I can inspire you, and hopefully, maybe if you're on the fence, I'm not quite sure technical analysis, hopefully I can just kind of shove you over the fence in a nice kind of way that inspires you to maybe want to learn a little bit more about it. So yes, I am very biased. Yes, I have my other goals of potentially maybe you wanting to buy a course and having me then show you how technical analysis works in great detail. But I think I have very logical logic here. And I think the best way to illustrate this is just to use a real life case study. That happened. And I think it's going to do a good job of showing just kind of why technical analysis is so beneficial, just why it's so kind of, I guess, just cool. It's a cool tool to use. So in the training courses that you may potentially be interested in, or maybe not, but in the training courses, the majority of the examples I'm using are stock charts. So right now you could think of, well, then why would I ever do that? I want to trade Forex. Why would I be interested in a course that's talking about stock charts? Well, this is where the coolness starts to come in. So within what's called Clay Trader University, my mentorship program, there we have live webinars, and live webinars are, at this point in time, I just did episode number 100, so it was actually a pretty cool big milestone. But one of the common things is, hey Clay, will you show us how to trade Forex using charts? And I had that happen a bunch of times. I've had it happen, outside of the university. So I decided to get a little tricky, and I decided to kind of play a little trick on all the members on one of these live webinars. So in episode 100 of the webinar, we call it Trade Talk. I showed them this chart, and the one thing that take note of on the chart is that I conveniently just cut off the values over here, and I cut off the time frames down here, which are two very important parts of a chart: time and then some sort of value. So value. But I cut that off. There was nothing over here. And I said, all right, everybody, let's just talk about the quote unquote story of the chart. Let's just talk about what we visually see going on. So we went through it all and mapped out all sorts of things. The way the webinars work is, people can interact with me. So, we just everybody interacted, and we just nailed as a group this, that, and the other, and did a good job of just summarizing the chart as a whole, and went through all the different components of it. I didn't do anything. I just asked, and then people started to contribute, so we compiled a list, and it was a great summation of the quote unquote story of what was going on. So after we had done that as a team, I then kind of got a little tricky, and I realized, or I revealed to everybody that, hey, everybody, this is not a stock chart, but rather a Forex chart. And it was funny. Some people were like, oh, wow. The point here being is a chart is a chart. Anything that has a number, a value, so it could be a stock price, it could be an exchange rate, it could be a contract price, in the world of options, etc. But anything that has a number, and then if that number changes over time, which in Forex, what changes over time? The exchange rate, right? And the exchange rate is just a number. So, hey, that fits the criteria. So anytime you have a number that changes over time, technical analysis can be applied. Translation here, the transition from one trading vehicle to another is simple. Trading vehicle, I'm not referring to like a Chevy versus a Ford. I'm talking about from stocks to Forex to options to commodities to futures. It's very simple because all those things I just listed, they all have numbers involved with them, and over time, those numbers change. Therefore, technical analysis can be applied. So like I said, I revealed that, hey, this was actually a Forex chart. In fact, it was a euro-dollar chart. And there were some people that are like, oh, wow, I just totally analyzed a Forex chart. And it kind of was like, it was neat to see the light bulb going on where, yeah, sure, you can use a stock chart as an example, but just because you're using a stock chart doesn't mean it's not applicable to Forex, because at the end of the day, a chart is a chart. If there's a number, and if that number changes over time, then a chart can be used. Now, in the world of fundamental analysis, the same cannot be said. Analyzing a company and their stock is going to be different than analyzing the economic, the social, the geopolitical variables that surround world economies. And, those are the things that are influencing supply and demand, which are what? Influencing exchange rates. And as traders, that's what we care about. So don't get me wrong. I mean, I don't want to come across like, fundamental analysis is the dumbest thing ever. All I'm saying is that, it can't be learned. I'm saying that the transition is just more so like this, a little bit bumpier. So yes, you can learn fundamental analysis. Yes, you can dig in. Yes, you can learn about all those different aspects and characteristics of it that we've talked about in previous videos. But going from the stock market to the Forex market is different, because in the stock market, your main concern is analyzing an actual company, cash flow statements, balance sheets, PE ratios, debt, cash on hand, all those sorts of kind of accounting terms. And yes, that stuff would translate to Forex. However, then you get to Forex and you got to start to understand a lot more complex things, economic issues and all those different avenues that we've already talked about. So sure, you can learn it, but the transition from one to another is not going to be as smooth, and it always boils down to time. With charts, like I said, we literally, in that example I used of the real life case study, we literally made the transition from stock charts to Forex charts in the blink of an eye, and nobody even knew we did it because a chart is a chart. So to me, that was cool to see how, wow, these people have no idea that we're making a transition from a stock chart to a Forex chart. I mean, they're absolutely nailing it, but they have no idea. And then when it was revealed, it was a pretty good moment for some people because it just, like I said, that light bulb went on, and oh yeah, that transition was easy because yeah, at the end of the day, Forex has a number involved, aka the value of the exchange rate, and that exchange rate changes as time goes by. So ultimately, which is the analysis method for you? I have given you my reasons. I've tried to kind of justify why in my mind it's logical. Yes, it is front-loaded in time when you have to learn everything, but after you learn it, you can easily transition from stocks to Forex to options to futures to all that other stuff. But at the end of the day, where's your motivation at? What really kind of gets you going? Where's your passion at? If your passion is for, digging through articles upon articles and figuring out what that political entity may do in regards to that economic event, and that economic event, how could that influence, this, societal issue, which then may influence the unemployment rate, which then could, as we've gone up, the rabbit holes are endless, and they're all over the place, and they're deep rabbit holes. But if you love that, if you think that is awesome, then fundamental analysis, I'm not going to sit here and bash it in the sense of, it's never going to work. It's not worth your time. It's all about where's your passion at, where's your motivation at. At the end of the day, if you love doing that sort of stuff, then it is a good use of your time, right? It's kind of like, I realize my dad did not invent this quote, but he would always tell me, Clay, if you enjoy what you're doing, if you have a passion for what you're doing, you'll never work a day in your life. Or in other words, if you enjoy what you're doing, it's actually a good use of your time because, hey, you enjoy what you're doing. So if you hate charts, if you just think, charts, I don't want to look at pictures, I want to get into the nitty gritty, then hey, you're going to have a real problem with charts because there's not really any passion there. On the reverse side, holy crap, I would like to have some sort of social life. I do not want to be digging through all sorts of different articles and trying to come up with these economic theories. I'd rather just look at a picture. I'd rather look at a picture and say, okay, there is supply, there is demand, and then form a trade plan around that. If that's kind of where your passion's at, if that sounds, motivating to you, then hey, technical analysis would be for you. But it is a case-by-case basis. For myself, I would rather save the time by looking at a visual and then putting together a trade plan and just simply trading, what I see, not what I think is going to happen. That's what us technical traders are doing. We're trading what we see, whereas a fundamental trader is trading on what they think is going to happen. And they're truly, and I should, because I realize like, wow, you are so biased. But right here, there is truly not a right or wrong way to go. Both analysis methods have worked out very, very nicely for people. And really at the end of the day, as we've discussed, in the world of Forex, both analysis methods should be used anyways. Sure, you want to have your backbone method, and then the other one can come alongside it to complement it. But I can't sit here in good conscience and say, look, fundamental analysis is a scam. It doesn't work. No, people have done very well with it, and it's all circling back to where those two words there they go. What is your passion? What is your motivation all about? Because if you're trying to do something that you don't have passion for, then you're going to have a real hard time of getting motivation for it, and it just is not going to work out. So once again, I realize I've been kind of giving a lot of gray answers out there in terms of, well, it's up to you. But at the end of the day, it truly is up to you. It's up to you what sort of broker you want to choose. It's up to you what sort of platform you want to use. And it's up to you what sort of analysis method you want to use. Like I said, some people, they want to go scuba diving in deep, dark caves in order to have a fun time because that's what their personal risk tolerance is. Other people, they'd rather just kind of, I'm going to take a walk in the park. And for me, that is totally fun, and that just fits their risk tolerance. We're all different. Yes, we're all creatures of emotion, but we're all definitely different creatures in terms of personal risk tolerance and how we perceive risk. So therefore, that's going to lead into just what do we like? What do we not like? So sorry for the gray answer, but that's just the fact of the matter. There is some great news here, though. In fact, it's certainly the best yet we've had. Perhaps you're sitting here thinking, well, this guy is a jerk. He won't commit. Either way, just tell me what analysis method I should use. So yes, you certainly need to take the analysis method that you're going to use. You need to take that very seriously. There's no doubt about that. However, it is not a situation. Let me repeat that. It is not a situation of needing to know for sure. I should have bolded that. For sure, and have it all figured out. So you do not need to commit on the spot right now or when this, video ends and say, all right, well, it's going to be this. And then, you close your eyes, you plug your nose, and you jump right in. That's not how this works. And the reason that's not how it works is because, and I've alluded to this in past videos, but Forex has a massive advantage, at least in my opinion, over the stock market. Due to the routineness, it's not really anything out of the ordinary. It's very routine for a broker to have a demo platform. So you can, what we call, paper trade. Or maybe you've even heard the term paper trading. What exactly is paper trading? Paper trader, paper trade. What is paper? What are you talking about? Simply put, you're a little kid again. You get to be a little kid, but instead of playing, cowboys and Indians or cops and robbers, or I don't know, I guess in this day and age, do kids even play those games, or are they just playing video? Okay, I'm not going to go off on my video game rant. Anyways, if you play video games, that's fine. We can still be friends. Just hopefully you play outside once in a while. But all it is pretend trading. And that's what you're doing. You are pretending to trade. And, I'm not trying to sound too opinionated, but it's not an opinion on my part. This is a requirement and a must-do. Especially for Forex, for the reasons we've talked about before in regards to leverage, in regards to volatility, and those sorts of attributes that can be beautiful, beautiful things. But if you don't respect them, then it's not going to turn out well. And one of the easiest ways that you can respect things is by, practicing. And how do you practice? Well, thanks to the many Forex platforms out there, they offer you a demo. The best thing you can do for yourself is find a broker that you think you're going to like. Find a platform, of course, that you think you're going to like. Again, remember, make sure they're all regulated, because there's no point in doing a demo and then get, oh, wow, this demo is awesome. I'm really learning my way around it. And then, oh, crap, this is not regulated. So, go through those steps as you should be. And then just start to do some experimenting. And experiment with these methods that I've talked about. And just get a feel for how the market operates and how everything unfolds. A very basic example, a very, quick but effective example, I think, is just what we talked about when one of those calendar events. Go Google Forex calendars, Forex announcements, and then figure out one that, pertains to the currency pair that you're looking at. And you know what? Maybe you're going to be dead wrong. Maybe you're going to think, oh, crap, well, I guess that speech really, the currency pair does not care about that at all. Well, hey, you know what? It may seem like a failure because you found some announcement that didn't affect anything, but you know what? You just learned. Okay, well, it seems to be at this point in time that, the German trade balance doesn't really affect the euro dollar right now. But you know what? It's not like you put money on the line and lost any money trying to learn all this. You were experimenting. You were using the demo. So that's just one little example of calendar events. If you're wanting to use charts, then, hey, check out their charts. Start to experiment with it. If you want to do fundamental analysis, well, then hit the books. Come up with some theories, come up with some, trading what you think. So, right, technical traders trade what we see. Fundamental traders think or trade what they think is going to happen. So come up with some, I think this is going to happen because X, Y, and Z, and then watch the demo. Is that what's going to happen? If it doesn't happen, hey, maybe you can go back and learn why it didn't happen. Maybe you missed something. But all this is happening in, imaginary land. It's all pretend. You don't have any real money on the line. So that's why I say it's not like, all right, it's got to be technical analysis. It's got to be fundamental analysis. No, maybe you just start experimenting. You're thinking, I thought I had enough time. I thought I had enough passion for this fundamental stuff, but I really just don't. Let me try technical stuff. Maybe on the flip side, I really thought I was a visual person. I really did, but I'm just not feeling it. It's kind of annoying to always be looking at all these candlesticks but I always find myself reading, the Wall Street Journal and reading, deeper than more than just headlines. Then take that as a sign was, hey, maybe you should be going into fundamental analysis. But the whole point is during all of this, you are practicing. You are using a demo and you're not losing any real money. You're not blowing up any, accounts of at least real money. So demos are just a fantastic thing. They are all over the place. And if your broker does not offer a demo, then I mean, find another broker. I mean, I have, like I said, I have yet to come across a broker that doesn't have a demo, because, demos are very commonplace, and, in competitive markets and free markets, hey, wow, that broker's got a platform or has got a demo. Well, if we want to be competitive with them, we better get a demo. And, it's kind of just gone from there. And like I said, most brokers have platforms. In fact, here's one that I just copied and pasted. So you can see live buy and sell prices. That's fantastic. You can create, monitor, and manage trades just like you could with real money. You can trade online. Well, you knew all that, 24 hours a day, 5 days a week. So that's not new. And then, practice trading. Risk-free. Now, this is where the massive warning comes in. It is not risk-free. I am in no way suggesting that the broker that put that in their advertisement is trying to be malicious or anything like that. But unfortunately, practice trading is not risk-free. Don't get me wrong. I think you've probably connected those dots that I'm a big fan of paper trading. I'm a big fan of practice trading with demos. There's no doubt about that. That is a must-do, especially in the Forex market. But to say that it's risk-free is just not true. Let's talk about why. Practice trading, paper trading is not risk-free if you don't take it serious. And one of the best quotes out there is, I'm sure you've heard of it, practice makes perfect. Well, that's one of the actual worst quotes out there, because that's not true. Practice does not make perfect. Perfect practice makes perfect. If you want to, play, okay, I want to get into golf. I want to get involved in golf. And then all of a sudden you're using a baseball bat to play golf. Yeah, hey, I'm practicing golf right now. You are? By using a baseball bat? Shouldn't you really be using a golf club if you're going to practice golf? Or the flip side, yeah, I'm practicing baseball. Oh, you are? Then why do you have a golf club in your hands if you're practicing baseball? Well, I'm practicing. Well, you're not practicing properly. You're clearly not taking things serious enough. And the same is here, or the same is true here, just that much more important, because there's money on the line, and this is how bad habits can creep in. This is how you can give yourself false hope and be thinking you're, God's gift to Forex trading, because you were just tearing it up, and then all of a sudden when you go live with real money, things just don't quite unfold the way that you would think they are. So let me find this. When you don't practice properly, now I'm not saying you have to be perfect, but you got to practice the right way, because when you don't, these are the attitudes that start to kind of show up. Hey, I'm always right. And then rule number 2, in the event that I'm wrong, see rule number 1. And these attitudes are not good, but they can happen because paper trading can build false confidence. And it's, like I said, all of this, for you to fall into this trap, you don't have to be a moron. You don't have to be an idiot. It is a situation where it just happens. It's easy to fall into. That's why I want to spend time here and then just really focus on it. Now, I've kind of been maybe raising my voice a little bit, saying you got to take it seriously. You better, do it properly. So how exactly am I defining seriously? Right here. You have to know your numbers. You have to have you have to know them exactly, not quite exactly, but you better be in the ballpark. And you better not just be making stuff up. But what kind of numbers am I talking about? Well, let's just go through really the three main ones that you better be aware of and you better take very seriously. And again, know those numbers. The first question, what lot size are you going to be using? I realize it's very tempting. So don't go and start paper trading with 500,000 lot sizes. And then when you go to real money, you're using 50,000 lot sizes. Yeah, I realize that you can, in a broker or in a demo account, a lot of them, you can have almost unlimited money. You can say, all right, I'm gonna demo with pretend like I have $500,000 in my account, then I have 20-to-1 leverage, and all of a sudden you can take massive positions. Big rule of thumb here is if you plan on putting $5,000 into your account, then trade with a demo account of $5,000. If you plan on trading with 50,000 share lots, then you better demo with 50,000 share, or not 50,000 share lots, but just 50,000 unit lots. It's got to be a one-to-one translation. If you're practicing with a 1, you better come over here with a 1. None of this, and it happens all the time. Hope you're saying, well, that's stupid. Well, good. You're not going to have to worry about doing it then. But way too many people, and that's my one kind of nitpick with a lot of these demos, is they'll start you off with some astronomical number that you're never going to have in the first place, so it just doesn't create a realistic perspective, because trading with a 500,000 share lot is going to be a lot different than a 50,000 unit lot. So that's the big one. That's number one. If you're going to fund your account with $1,000 or with 1,000 of whatever your currency is, then you better be demoing with that exact same amount. Currency pair. So what currency pair are you going to trade? Do not start paper trading with the euro dollar, and then when you go with real money, start trading, the dollar versus yen. I realize that doesn't make any sense. I know it doesn't, but just be careful. I've seen quite a bit. Remember, we want a one-to-one transition. We want it to be as smooth as possible. So get really good at focusing on, a few different currency pairs. And then when you go live, stick with those currency pairs. Another thing, time of day. Do not start trading the euro dollar from 9 a.m. to 11 a.m. Eastern time. And then when you go with real money, you start trading it from 7 a.m. to 9 a.m. I realize that doesn't make any sense. Good. Don't do it. Do not do it. Everything needs to be as close as possible to what happens when you go with real money. If you can do these three, then you're going to be well on your way. Now there's, it can break down even further. So again, because I use charts, I'll just use a charting example. If you have been, practicing, momentum breakouts, so, you're doing all three of these the same. You're doing a great job with this. You're keeping it realistic in terms of your, unit size. You're keeping it realistic. You're always watching the currency pair, and you're always trading it, during those times of the day. But you're, and you've also, from a technical analysis perspective, you're trading, momentum breakouts. Don't all of a sudden, when you go live with real money, change things up and go like, all right, now I'm going to buy pullbacks. Wait, what? That's not a smooth transition. That's not a one-to-one transition. You just totally change things up. So keep that in mind. You need to treat your demo account just like you would a real money account. And I realize I keep saying this because it's so important. I see it all the time. I get it. This stuff seems like, duh. I realize that. Why would I ever? People do it all the time. And then when I point out, they're like, oh yeah, that's a good point. What was I thinking? Yeah, I don't know what you're thinking, but that would probably be why you're starting to struggle when you go from pretend trading to real trading. I realize it's fun to dream about having massive unit sizes or, trading, 18 different currency pairs. But you got to keep dreams out of the way, keep things all realistic. Final thing, when you do go live, you really should lose money or at best break even. Why should this be the case? Well, you need to start out extra small in your position sizes. The point behind this, I want you to feel the psychology. What the heck does that... we were so close to the end of this entire course, and my thing had to freak out one more time. So I guess it wanted to say its goodbyes too. But anyways, what do I mean by feel the psychology? It's all about this right here. This is you, and then these are the voices that are in your head. If you have never traded before, then you're just not aware that these voices exist. But as soon as you put real money on the line, not demo fake money, but real money on the line, and then you start to see, okay, I'm up. Okay, I'm down. Okay, I'm down some more. Okay, it's coming back up. Okay, hey, I'm up. I'm up. Oh, it's going back. These voices are going to pop out of nowhere. And, whoa, nice to meet you. Oh, okay, hey, nice to meet you. I did not know you were there. That's why, people that have never traded, if they talk to somebody that has traded and are listening in on another trader's conversation, the traders are going to sound like lunatics because the traders are going to be sitting there talking about the voices in their heads and how, the voice of greed was saying this, and then, the voice of panic was saying that, and oh yeah, my voice of uncertainty was saying this. They are out there. It's just a matter of how can you get them to come visit you, and the best way to do that is to use real money. But just because you use real money does not mean you have to go out there and totally use some sort of crazy size. Now, am I contradicting myself? Maybe a little, but hopefully you're kind of seeing the difference here. Yes, I'm saying if you plan on using 50,000, then you should use 50,000. Well, when you're first getting started, if you're planning on using 50,000, maybe just try 10,000. Again, we're not trying to get a flawless translation right away because we got to meet our voices first. We have to feel the psychology. Now, if you want to go 50, that's fine, but my recommendation is always just start small. Sure, you're probably going to lose money because you're very, very small position size in the first place. But at least it gets your mind, at least it partially introduces you to these voices that are going to show up when you have real money on the line. So if you're going to do any direction, if you're not going to do a smooth translation in terms of 50,000 when you're practicing to 50,000 with real money, do 50,000 when you're practicing and then drop it down when you first get started by a long way so you can feel the psychology and learn about these voices. So this is all super important. Probably the most important thing in the course, because if you're not practicing properly, if you're not taking this paper trading seriously, everything you've learned up to this point, including whether or not you choose to learn technical analysis or fundamental analysis, it's going to be bad habits. It's going to bring bad habits into your fundamental analysis. It's going to bring bad habits into your technical analysis. And that's not what you want. Yes, bad habits can be broken, but it's so much easier if you just don't have the habit in the first place. And when you're treating your demo properly, when you're treating it seriously, I'm not going to say that you're going to be the perfect trader and you're going to make $8 million the first week. I'm not saying that. I'm just saying it's going to help keep you on the path where there's not going to be headaches, there's not going to be heartache all the time. As traders, get used to it. It's a mental game. Those strains are going to be there. But let's try to work as smart as possible and not as hard as possible. And the best way to do that is to just know your numbers up front and keep practicing as smooth as possible to when you go, with real money. So that is it. Thank you for, again, I started the course with this. I will end it. I appreciate you, giving me that vote of confidence, that vote of faith by, paying me so that I could help show you how all this Forex stuff works. And along with that, as always, any questions, any comments, suggestions, anything like that, please reach out to me via the many numerous ways you can get a hold of me. I hope you found the course helpful. If this was your first course, hopefully you're interested in other courses. If not, then I still wish you all the best in your journey with whatever you decide to do. Like I said, even if you decide, I'm not spending another dime with you, Clay, I'm still here to answer questions, so ask anything that needs to be asked about the course, and I am more than willing to help you out. So thank you again. I truly appreciate it. I genuinely, hope that you got something out of this, and maybe I'll see you around, maybe I won't, but either way, all the best to you and your trading and your journey.